Good morning. Today is Tuesday and the date is January the 10th, and the time right now Singapore is 11:03 in the afternoon, in the morning. And overnight on Wall Street, we have an extension of Friday's activity on Wall Street. Basically, Friday, the market reacted on the non-farm payroll to the upside. And yesterday's, at least in the first half of trading in New York, we saw the price continue to extend higher based on the momentum that it has acquired on Friday. And but towards the second half of the session in New York, we can see price started to unravel, ending the market basically unchanged for most of the equity index. And this is getting ready for the next major event for this week will be the CPI numbers. In fact, this week itself, we have a lot of countries releasing the CPI numbers. So going forward for this week, I think today and tomorrow market will just be basically marking for time, except that today we have the a speech by the Fed chairman in I'm not sure where he's speaking from, but there will be a speech that the market will be looking for clues as to what he may say about the future of interest rate, at least for the next FOMC meeting. But when you look into his past history, when he talk about monetary policy, he does not throw us any curveball. He has been a very straight talker so far. He has mentioned that interest rate is going to stay high and for longer, and there's no prospect of him cutting interest rate this year. So I think that would be the main thrust of his message again. So like I said, there will be no earth-shaking kind of revelation tonight. So while the market is looking for towards this speech that he's supposed to give tonight, but like I said, there will be no earth-shaking kind of information we can actually peel from his speech itself. So like I said, over the next 48 hours, I think the market will be hanging on, getting ready for the CPI release on Thursday. Okay, so that will be the headline for this entire week. So we can see that on the Dow Jones, we see the market actually climb back to the 61.8% retracement from 34,712 to as low as 32,573. So yesterday, the pullback here at 33,000, just under 34,000, was exactly where the 61.8% retracement was. And you can see the market actually end up with a reversal pattern. Although it is not very big, this is a 4 hours time frame, but it does cause the market to pull back. Okay, so over in the S&P 500, we see basically the same thing. The market did not quite reach out to the 61.8% retracement. You can see the higher was 4,100, the low is 3,761, and the pullback here at just under 4,000 was just beneath the 61.8% retracement. Didn't quite get there, but again, the market comes back down. Okay, so over in the Nasdaq, we saw the exact same thing. Just that the market could not even go up to the 50%. It only reached the 38.2% at 11,313, and then started to come back down. And yesterday, I took advantage of this to went short the Nikkei, the Nasdaq 100. So we will want to see whether it can actually sustain over the next 48 hours. Maybe if the market can come down substantially, maybe I will try to pare down my position getting into the CPI numbers. Hopefully that will be the game plan. We'll see what happens next. Over in Hong Kong, we can see that the market has stopped rising. We can see yesterday high in the Hong Kong market was 21,487, and today the market is basically just hanging on there. This is only the second day of the opening of the borders between China and Hong Kong. So the sentiments in Hong Kong is currently very buoyant, and definitely it's not a good time to go in and count and try to sell this index. This counter trend rally is actually quite aggressive, and there's every likelihood it will go even higher to 22,118, which is my target right now. Okay, now over in the Shanghai Composite Index, we can see the prices also mimic what we see in Hong Kong, although it doesn't have the same kind of aggressive movements to the upside. Market high yesterday was 3,186, way below the December high of 3,225. So at this current rate itself, the market only retraced back 78.6%. 78.6%, which is another Fibonacci number. For those who are technically inclined, the market always retraces to various levels. First, we have the 23.6, which is very, very shallow. Then we have 38.2%, then followed by the 50%, which is very, very common. And the other common relationship will be 61.8. Now, 78.6 is a little bit rare, but it is also possible for the market to go up all the way to retrace all the way to 78.6 and then meet some resistance or meet some support depending on whether it is retracing to the downside or retracing to the upside. So in this case, the market was down, now it's pulling back up. So the retracement, this is called a technical rebound, and it has met its resistance at the 78.6 resistance for time being. Okay, we will see. Okay. Then over in Nikkei, we can see the prices actually opened with a gap to the upside, went up to as high as 26,322, and then now you can see that prices is sliding to come back. And if the market ends here at the 4 hours mark, then possibly we can get a reversal signal here, which is quite obvious here. Okay, so do watch out for further prices, possibly to the downside for the Nikkei 225, because this market has already traced out a 5-wave pullback. Decline, sorry, a 5-wave decline. And if it is a 5-wave decline, technically the market has the tendency of doing a 3-wave rebound back to the 4th wave of one lesser degree, which is this current level at 26,630. So even if the market pulls back, there is a possibility it will try again, and the area of vulnerability will be 26,630 in any kind of subsequent rebound. Okay, so this will be an area to watch. Now, over in currencies, we can see dollar yen continue to slide based on the momentum that we saw on Friday as a result of the non-farm payroll. After the release of non-farm payroll last Friday, we can see dollar generally has been coming down, and yesterday's the market continued based on the momentum that we saw on Friday. Basically, it's trading to the downside, but there was no major move. The market was actually quite controlled. You can see there's a bunch of prices here, so it was relatively well controlled. So we can see that the price has been trading downwards within this price channel here. So the bias is definitely to the downside for now. We will have to see how far it will go. There's a lot of people were saying that maybe the market can go down to 126. Some even say 121. So let's take one level at a time. The immediate level it must break is the 129.5, which we saw on last week on Tuesday itself. Okay, so on sterling, as because the dollar has been retracing downwards, so everything else would have to rebound. So we can see the rebound in the currencies has been very aggressive. So we can see sterling is a good example. The market took out an overhead resistance and never quite looked back all the way to 122.13, 122.11. So the market right now is at the mid of this rising channel here. So sometime in the channel, if you take the midpoint can either act as a pivot, either as a support or resistance. In this case, this is acting as a resistance. So we can see the market is struggling near the midpoint of this rising channel here. So if the market do slides back, hopefully it can hold at this previously resistant, now possibly turn support line. Okay, so that will be nearer to the lower end of this channel. So hopefully we can see some support here, and then maybe the market will try to go up again. Okay, so over in the euro versus the dollar, it is even stronger than what we saw in sterling, because it took out the December high, which is 107.36. Yesterday high was 107.61. So again, the market is approaching the midpoint of this rising channel. So as the market try to go up, maybe this rising channel midpoint here may act as some kind of resistance like what we saw in the sterling versus dollar. And if there's going to be any kind of pullback, hopefully it will either hold at the bottom of this rising channel or maybe near the resistance now turn support. Okay, over in the Aussie dollars, we also saw a relatively robust rally all the way to just under 70 cents. Market went up to a high of 69.49 cents, and we can see this is relatively bullish. We can see that the market wants to go up, so let's allow the market to seek its level before we come to some kind of conclusion as to whether we want to trade on the long side or the short side of dollar. Okay, so this is the dollar versus Canadian. Now this is one of the outliner, because I was actually, prior to this week, I was actually holding on to I was actually having a bullish view. In fact, I was holding a bullish view going into last Friday's non-farm payroll, but the way the market came out was a little bit aggressive. It took out the 50% mark, of which I already marked out. So the fact that it came down so aggressively make me stand aside and watch this move, because typically this is a very impulsive move, meaning to say there will be a period, ideally a period of consolidation like this, all the way back to the 50% mark. And then if they break the support here, then maybe we can go into sell for another move down to challenge the November low at 1.32. Okay, so this is how we will play this. Let the market drift. If we want to go up, let's see how far it will go. Then we draw a support line right at the bottom, and then at the break of this support line, we go in and sell and put the stop just marginally above the most recent high. Okay, and we take advantage of the momentum right now. It seems to be favoring the downside for dollar. Okay. Now we look at crude oil. Crude oil was actually within my expectation. I remember yesterday I was saying that on the way up, I actually managed to catch this move here, the three-wave move. It's actually an equality move, okay? So I was long basically at $78, $76 and $76.78, okay? And the market went up to above $80 and I started to sell off. And as the market was coming back down, I was thinking maybe the market will do another set of three waves. So I started to buy at $76, but the market went up all the way to $72.45. And yesterday, remember my update, I was saying that the market appears to be doing a three wave. And this three way, if I do the calculation, there's an equality move just under $76 or just around $76, which is exactly where I got up last night. And I managed to scratch the trade without having to lose money, and the market immediately came back down. So based on this, there is a possibility the market will continue to drift lower, perhaps down to the to test the most recent low at $70, maybe even lower to $67. From now until tomorrow, tomorrow I do expect some kind of reversal going on happening in the crude oil market or in general the energy markets, including natural gas. So I would like to see the market drift lower. Okay, and then as the market drift lower, if it give me the first clue of a reversal sign, I will jump back in and buy. Okay, because tomorrow, ideally I will do this tomorrow, not tonight. Tomorrow, and I want to take to take the signal that comes in on the buy side. Okay, I'm looking for buy signal tomorrow. Okay, now we have the gold market has been very, very firm. This is the spot gold market. Market went up to a high of $1,881, almost $82, which is marginally above the last June high of $1,979.45. But you notice that the market did not close above this previous the last year June high of 1,879.45 cents. Okay, it has managed to go beyond but did not quite close above. Okay, so that gave me an inkling that maybe in the short term we may see some kind of pullback, and if there's going to be a pullback, ideally we can see a deeper pullback, not just a marginal pullback. If the market cannot break this near-term support line, that would mean it is a very shallow pullback. Okay, ideally I would like to see some kind of more decent pullback, ideally to come and test the December low, but we will have to see how the market reacts as it comes nearer to the support line here, if it happens. Okay, definitely I'm not going to buy at this current level. I'm very, very bullish on both silver and gold, but at this current level, it's a no-go for me. Okay, silver managed to pull back a little bit deeper than gold. We can see that silver did not do a high, did not so you can see the high traded was $24.13. So this high here is $24.55, was actually traded at the beginning of the year itself. So we can see prices is doing this move here. There's a very good chance it will break below this rising channel. It may or may not be significant, but we will see how far it will go. If I do a simple three-wave pullback, then maybe there's a chance the market will go down to $22.70 or to maybe to as low as $22.30. This would be a great level to see if there's going to be any kind of reversal signal on the buy side, and if there is, then maybe it's time to go back in to buy again. But until it happens, we will have to watch. Okay. Over in the crypto space, we can see the prices continue to edge higher. In Bitcoin, the market went up to 17,406, which is just marginally above the 50% retracements of 18,375 to 16,285. So this midpoint here actually saw a reaction, and not only that, we saw there's a reversal signal here. This is a key reversal signal, and hopefully we can see prices starting to come back down. Okay, so if the market come back down, obviously the first area to look out for will be this rising channel, this rising support here. If the market can actually hold here, then maybe it will go back up again. If not, then we will look for new development. Okay. Anyway, I'm already short the Ethereum, but maybe I have short too early. As the market was going up, I actually shorted at the 50% and the 61.8% level, which is 1,260 to 1,270 levels. I went short within those areas, and the market went up to as high as $1,377, $44.74, which is very far from my entry price. So now I know I'm on the wrong side of this move here. My stop has not been triggered because my stop is just above this level, which is $1,351. Okay, so I'm hoping that my stop will not be triggered first. In the meantime, the market does pull back, and I want to see some kind of reaction along this very near-term support line. If it can hold, maybe I will just simply cut loss. If it cannot hold and it goes back down, break this line here, then I know that market has the potential to actually test the lower support line. Then maybe I may come out of this making marginal money. Okay, I may actually be able to make some money out of this. Okay, so I'll be watching the market as it pulls back. Okay, how far it pull back, I will have no idea. I will have to take it one day at a time. Anyway, my stop is above 1,355, I believe. Okay. Ethereum is also pulling back. There was hardly any major move to the upside. The market only managed a high of 0.3580 and then starting to pull back. Moreover, the market is very near this technical resistance line here. So this upside is actually quite limited. Possibly the market may actually come back down. Okay, if you draw this support line here, okay, this is a very near-term support line. If you can hold it, hold it, cannot hold, I think it may come back down again. Okay, we'll have to see how market reacts. Over and Binance coin, we can see the market actually reacting at the 61.8%, 61.8%, which is a Fibonacci level. So market actually had a high of $284.10, and then it is coming back down. Let's see what kind of reaction we get at the near-term support line here. Dogecoin, of course, maybe I shouldn't even be covering this coin because I have no interest in this particular coin at all. Okay, and it's not telling me anything. The market near-term resistance is probably at the 38.2% retracement level, which is about 0.08135. Okay, then Cardano has a big move. Cardano went from just 0.238 all the way to 0.346 and then pull back, and now the price is marginally below, okay, trading below the previous resistance, not the support line. Now he has gone below the support line. I would love to see this market pulls back all the way to the 50% mark, because the structure of this rally here suggests that this market has momentum. And if anything else, if the pullback is very corrective in nature, I would like to see some kind of support near the 50% mark. And if I get some kind of a reversal signal along this line here, which is about 0.292, then maybe I would take my chance to go in and buy this thing and put my stop just under the most recent reaction low here and take my chances for a challenge of this 0.346. Okay, Solana also starting to pull back, but it's not as deep as what we saw on Cardano. So, but by and large, you can see the structure is very, very similar. The market here suggests that it is getting ready to go up. Okay, after a mysterious fall below $8, now the market is above $17. So we can see that current market price is about $15.77. So based on this pullback, we see maybe the market can drift all the way to test this near-term support line, and I want to see some kind of reaction. Ideally, maybe the way it is moving, I may not be able to see a 50% pullback. Maybe I can hope, the best I can hope for is perhaps the 38.2%. Okay. Anyway, anywhere near this level, which is $13.87 to $12.74, this area actually give me a pocket of opportunity, because at the 50% mark, you can see that this is where the market actually based before it took off. Okay, so if the market drift back into this zone here between $12.74 to $13.87, that could be an area of opportunity. Look for buy signal here, and then if you see a reversal signal within this bracket of prices, maybe we can go back in and try to buy this thing for another challenge beyond $17.50. Okay. Now, the other coins are not doing fantastically well. It's more or less the same structure. So maybe the opportunity could be in Cardano, as well as in this particular coin here, the Solana. Okay, so this is all I have for you for today. And I do watch out, the market is all gearing up for tonight's Fed Chairman speech. And beyond tonight, of course, will be the CPI numbers released on Thursday. In the meantime, you take care. Bye-bye.